let's start. I don't know if Catherine is going to be able to join us or participate. She said it's fixed, but I wanted to I guess we can just touch base with those of you that are here online. Is there anything that's sort of come up this week that's been a little bit challenging, a little bit curious? Any little contract challenges or frustrations? Tom, how's things going?
Pretty good. I have Anne to annoy me through all my missing documents, and that's working out well. So she does a good job reminding me that I've left stuff. And then, of course, now with Justin, I have him too. So I have
Yeah,
the two-pronged approach. So
yeah, that's
no, but no challenges. I've had some stuff that wrapped up that came together for the end of the year, and I've got a listing appointment on that I was supposed to have yesterday that I postponed to the 27th.
yeah,
Um,
yeah.
so I might be able to get that. Won't go live before the end of the year, but definitely get it signed up before the end of the year. But no big challenges. No,
Well,
I mean, I'm looking forward to us reviewing the new rules for the new land development, right? So
the density bylaws and that kind of stuff. Yeah,
yeah,
yeah. Be interesting to see once all those details are finalized and firm and in place. But even right now, I mean, you still have the ability to take advantage of your coming soon marketing if you wanted to do a little pre-promotion on that one.
yeah,
You got about 2 weeks left
yeah,
before that changes. So
yeah. Oh yeah, okay, yeah. Well, I don't have it signed up yet, so
gotcha. Yeah. Catherine, are you fixed? Are you able to unmute and say good morning? What about Morgan?
Good morning.
How's Morgan doing?
Just waking up, to be honest.
Just waking up. Oh my
A night
goodness.
sleeping. That was amazing. So I'm not showing because I'm in my Christmas jammies, okay?
How was the tour and stuff like that yesterday? I loved the fact the office was super busy yesterday morning. It was great to see all those bodies floating around there.
It was awesome. Yeah, the energy was great. There was lots of people there and lots of good feedback. And we served drinks and food at a couple different ones. And yeah, it was just good participation all around.
Awesome. Awesome. And Brittany, anything you want to share with us this morning before we start talking clause work and stuff?
No, nothing off the top of my head, but I'm always interested in listening, so.
Sounds good.
Good morning.
Good morning, Catherine. Technical
It was-
challenges solved?
I beg pardon?
Technical difficulties have been solved?
Yes, they have. It was brilliant in Lake Cowichan yesterday. I was so impressed with the people that put it on. It was lovely.
Well, I was online with our broker meeting while everybody was gathering there, and it was a little bit tough to juggle between the meeting content and all of the conversation and hustle and bustle in the office just outside that little glass door there.
I'm sure it was.
And Andy, welcome.
Good morning, everybody.
What's happened? So we were chatting a little bit earlier about some hesitation, and we'll get to clauses in a minute. But you know, you were having some or expressing some thoughts just around some challenges with a client that's a little bit gun shy and a little bit hesitant to pull the trigger, although pulls the trigger and then immediately kind of backs out anytime there's some proposed change. More or less. So have you been able to have the conversation with him about what the hesitation is or what the holdback is as far as him actually wanting to commit?
Yeah, I mean, it's typical first-time home buyers, shakiness and fears, which I understand because it seems like a mammoth well, it is a mammoth purchase.
Yeah.
So I mean, I definitely sensed it, and I have ever since the get-go. And I said, listen, I really want to help you succeed, and it's because it'll give you, future financial security and the stability of being able to live where you want without having to worry about rug being pulled out from underneath you.
Yeah.
Just kind of trying to give a bit of a pep talk and show, that this is a legitimate investment that they shouldn't be afraid of, and trying to take some of those fears and stress away from them, and putting them on my shoulders, because that's kind of our job, right? And so he felt really good about that. And then I said, listen, you got to remember that I'm here to protect your best wishes and needs, and that time is of the essence in these situations. So if these properties tick enough of those boxes, we got to jump on them before someone else does. And then we have our due diligence period of, 5 to 10 business days or whatever you're able to negotiate, right? So when I put it to that way to them, he felt quite a bit better. This is, of course, a conversation you want to have with your clients well before getting into an offer situation. But some clients, as we all know, are a lot more hard-headed and think that they know everything because they've watched a million and one reality shows, and they're listening to their parents, chitter chatter about what's in their best interest. So sometimes it has to take, unfortunately, a bit of extra work on our parts, and a bit of extra time, and a bit of heartbreak even, to see, to make these people realize that, if they don't listen to us, their potential property that they fell in love with could be scooped up by other people. And that's often what happens, is they have to feel a bit of that heartbreak before they start trusting you and commit to that second property, you know what I mean? And
there's a few elements to relationships like that if they're addressed sort of on an individual basis, sometimes that can help. And it sounds like you've done a good job at encouraging and helping develop their confidence in you as their realtor, understanding what your role is and what your obligations are and what you want to do for them. So building that confidence with them sounds like something that has been manufactured and is working positively in your favor. The other thing that worth noting too is just the current market conditions. There are tons and tons of forecasts out there that are going to suggest that the Victorian market is just going to start getting tougher again. The statistics and the economics, the forecasts, everything that we're seeing is showing for a pretty strong 2024. We're not going to see major rate decreases. So, I mean, what you're paying now is pretty close to what you can expect to pay throughout 2024. Maybe, a 25-point drop, maybe a 50-point drop. But overall, if you want to hold out for a 25-point drop, if you look at our market statistics, our prices are increasing, month over month, a few percentage points as each month passes. So you're not going to save any money if you're waiting for a 25-point basis drop in interest rates. You're actually going to end up paying more, even with a smaller interest rate. So understanding the market dynamic and helping them understand it is really important too. And right now, because of the amount of supply that we have, although it's not a balanced level of supply, it is significantly more than we had this time last year or even this time the year before. But still, it's not enough to balance the market. So with some of the buyers sitting on the sidelines, waiting or hoping that something miraculous is going to happen and they're going to get, a 3-point drop in interest rate, or, there's going to be all these price crashes and so on and so forth, that's not going to happen. There's nothing, statistically or evidence-wise to point in that direction. So, building trust, understanding the market. And then sometimes too, have you had the conversation? Now, this is a first-time buyer as well, right?
yes.
Yeah. Have you had the conversation about the psychology of it and the fear, like the buyer remorse aspect?
Yeah, I basically told him, that he's not some anomaly. This is not uncommon for a first-time home buyer to be afraid and have remorse and all that stuff when it comes to a purchase of this size.
Yeah.
I told him, you know, my experiences and the first time I kind of did it too, but you know, at the same time, you have to put a certain amount of trust in the professionals that you're aligning yourself with. And I think, you know, one of the best things we can do as agents to help allay fears and convey, you know, our message is just by telling stories, because they're real life situations that have happened to us or others, you know, so you have to be vague when you're speaking of others, of course, but and enough to you know, belay some of those fears, to gain that trust, and to, you know, just put things into perspective. I think one of the coolest things I ever heard lately was, you know, no matter what you're doing, you're always going to be paying a mortgage. It's just whose mortgage do you want to pay?
Totally.
Your own or someone else's?
Yeah.
I mean, that's so simple when you put it that way, but
Yeah.
it's so true. And it just, you know, really conveys the importance of forced savings and home ownership and that security. I mean, it's a no-brainer, really. So, I mean, when you put all those aspects together and you let your first-time home buyer know this, you know, if they're still not willing to take that jump, then, you know, maybe they're going to be a forever renter. The hardest thing for me is to know how far to go with this guy. I mean, that old saying, you can lead a horse to water, but you can't force him to drink, right? When you've expended all avenues to try to help this person get to where they want to be, but the only thing that's stopping them is what's between their two ears. Like, at what point as a licensee do you say, listen, I'm sorry, but I mean, I think I've come as far as I can with you, and you know, I don't think we can continue because I have other clients that, you know, need my time and who want my assistance, right?
So you know, in those kinds of cases, you know, I don't think you want to necessarily be so quick to get to the point where you're going to cast them aside. It's really about nurturing them through the process. And, you know, you talked about, you know, the statistics and the analytics and the math of ownership and renting and how all that plays out. You know, sometimes providing them with some information and some documentation on buyer's remorse. Sometimes people won't necessarily hear it all when you're telling it to them. Sometimes they need to read it, or they need to see it, or they need to see it from another source. But, you know, if you were to Google buyer remorse, you know, there's 1,000 articles and explanations and lots of documentation on what it is. Sometimes, you know, sending an article or something like that, you know, after you've explained it, to have them read through it could help them really understand and grasp like the turmoil that they're struggling with on the inside. You know, and another element to that too is, you know, having that conversation, you know, what does it look like in 6 months? You know, if you, you know, don't make the move right now, where are we going to be in 6 months?
Try that.
The same place we are now, only in a tougher market with much more competition and higher prices. You know, in 6 months, if you make this, you know, if you make this purchase, where do you see yourself in 6 months? You're going to be in your own home, you're going to be paying your own mortgage, and you're going to have, you know, you're going to have some stability and some security in where you're living.
And more likely an asset that's already appreciated.
Yeah, exactly. Yeah. Yeah. So, you know, the buyer remorse thing, and oftentimes people are, you know, they've heard the term, but they don't necessarily understand the full impact of it. So if you can find third-party article or third-party resources that help reinforce the message that you're conveying, and give it to them, you know, in a format that's different than you talking, give it in a format where they're reading it from somebody else or something like that, just so the message isn't always just coming from you, so it's consistent with other resources.
Yeah, no, that's a good point.
So I got a question for you, Andy. So what's holding them up? Like, what was the last conversation you had? What's holding them up?
It's basically price. It's not so much that he can't get the money. It's just how much monthly expenses you feel comfortable with taking on. And you know, we're talking about like a nearly $1 million property here. And you know, and for him to be able to comfortably pay the monthly expenses, he'd have to rent out, you know, one of the buildings for sure, if not both of them. So there's a bit of, you know, when you're having a conversation like that with your clients, you have to tiptoe around it and have disclaimers saying, listen, you know, zoning for residential zoning typically allows one extra suite, whether it's in the primary building or an accessory building, to be rented out to help you with your mortgage payments and stuff. However, depending on whether or not that suite is legal or non-conforming, comes into play too. You're taking a gamble. I'd say probably at least 90% of the suites out there are non-conforming, unfortunately, but they're still being rented, and you know, a lot of municipalities turn a blind eye. But there is always that chance that if one of the neighbors doesn't like you and complains to a bylaw officer, that you will get that income pulled out from underneath you. So full disclosure, keep that in your mind, right? That doesn't help, but I mean, you have to be upfront with them. So it's the same as if they have two buildings, and he has two buildings and he wants to rent out both the buildings and live in the garage. You know, maybe that'll be enough to help, you know, float the monthly costs. I'm sure it would be. However, that being said, there's a level of risk that he has to feel comfortable with taking, and that's what he's kind of waffling with right now.
So what kind of, you know, what's the risk that you want to take moving forward, but also what's the risk in not moving forward as well? You know, you end up paying more, end up, you know, end up on the short end of the stick, right? So it's everything is, every decision and every choice has risk associated with it, right? So it's not just the risk of purchasing, it's the risk of not purchasing as well.
Well, and this is it. And I explained to him that, you know, you're not married to this property. If you're in it for a year or two and you absolutely, it's just not working out for you, then sell it, you know, and downsize or go somewhere where you feel more comfortable. I mean, it's not as, you know, permanent as some people think it is. Like, this is it, oh my God, you know, it's not that way at all. So you know, just kind of going through all these different scenarios and having them feel more comfortable about, you know, the whole process and what their outs are, their options are, is really all you can do, right?
Yeah, yeah. And have you had the conversation about, you were talking about monthly expenses, you know, what he's paying now as opposed to what he would be paying, you know, with the purchase?
Well, the last conversation I had with him was basically like, you know, the best advice I could give you right now, Phil, is, you know, to really crunch your numbers, because I mean, you know, we've kind of whittled it down. I've whittled it down to that, you know, and he, you know, from what he's told me is like, you really got to be comfortable with your numbers. And if, you know, a nearly $1 million property is too much for your comfort, then we have to start looking at, you know, properties that are worth less, period, you know. But if he can comfortably make a go of it at this price point, then let's just do that, right? I mean, you don't know until you try. And then I gave him some of my own experience from when I owned my home up in Seashell, where, you know, I lived in it for the first 5 years I owned it. And then when I moved out and started renting it, you know, the rent wasn't covering my full mortgage payment. I was paying an extra $350 a month to hold that property, which is fine. Because I said to him, listen, this is an investment. It's not like that extra $350 a month was thrown away. It was going down to pay down my mortgage. It was going into savings. The whole time, my asset is still appreciating. I said, this is the way you have to look at it. And I said, not only that, but after the first 2 years of you know, the renter being in there, the rent, I was able to increase the rent enough to actually cover that mortgage payment, which over time may or may not get more affordable, depending on what the interest rates do. So, I mean, pay someone else's mortgage or pay your own, and that's where I left it. So,
Yeah, yeah.
let's see, right?
I got a question. Is this guy pre-approved based on those two rents?
Pre-approval.
I bet you he's not.
No.
So you're really wasting your time with this guy unless you get the bank to sign off on this, that they'll allow the two rents to factor into his debt service ratio.
Yeah,
Like
well,
until,
I mean,
I think he's got bank of mom and dad helping him.
Yeah, there's three people on title.
But there's
So,
gonna be a mortgage though, right?
there will be, it's just a question of how big is that mortgage gonna be, which he hasn't shared that information with me.
Yeah, because a bank will, they're very reluctant to give you, I think, to allow that second income. Not maybe not the first one, but I think you'll find they're reluctant to give you credit for that second one.
Yeah,
What do you think, Darren? So,
Sometimes they'll give you credit on a portion of it. I know some banks out there will take into account, as long as it's your primary residence and there's a suite, some banks will give you credit as far as the full value of the income on it. If the income is low, sometimes they will allow for a market appraisal on rent to do the calculation with to help with those figures. Some other banks won't though, so it kind of depends on where you're looking at. I know when I've purchased rental properties in the past, I've only got credit for half of the income coming in. They were only able to use 50% of the actual income as far as the qualifying goes.
mhm.
So it depends on the lender quite a bit. Yeah. Okay, did anybody else anything they want to add there? I want to talk a little bit about clauses. It's been a healthy topic of discussion for a bunch of us lately, and obviously it was a big part of the legal update. The challenges usually come when there's a lot of ambiguity or a lot of gray area, or there's uncertainty as to who's responsible for what and whose fault is this and whose fault is that. The classic one we've talked about many times is the seller will have the house professionally cleaned. In those types of situations, there's nothing concrete, and arguably courts have looked at clauses and stuff like that and just basically rendered them unenforceable because they don't actually have any specific action or a specific metric to weigh the validity of it. How things are interpreted when we're writing things, we can look at the Victoria Real Estate Board Addendum 2 and it just says subject to financing. If there is a condition, if you look at that clause and you compare it to the standard financing first mortgage clause that's actually in the standard clause library, there's some very different elements with the way those clauses are written. Subject to satisfactory financing, satisfactory to the buyer. What is that? It is really kind of a lot of the times the question that happens when you look at the clause library and all the recommended clauses. You'll see some very specific metrics as to what actually fulfills that clause, with an interest rate not to exceed X amount, with a principal mortgage amount not to exceed X amount, with a term and an amortization period not to exceed X amount. So sometimes there have been challenges in the past where a standard subject to financing clause, a buyer was able to obtain financing, but it was more than what they really wanted to pay. However, the contract was just subject to them obtaining financing, so they were able to obtain it. They opted not to. There was a challenge. The seller challenged the buyer and sued the buyer for performance because they actually were able to get financing. They just chose not to accept it and move forward with the contract. So how we write this stuff is really important, and we talked briefly yesterday about it and how we construct this. I will suggest that the addendum 2 in the Victoria Real Estate Board, for those of you in Vancouver Island, you may have seen it. It's just a standard single-page document that the Victoria Real Estate Board provides, and it's just subject to financing, subject to inspection, subject to title, subject to insurance. Very basic, very generic, nothing really super specific about it. So there's not a lot of actual clarity as to providing what the metrics are, and that's the type of clause or type of drafting you know, that will be fine 95% of the time. The problem is the other 5% that, you know, we read about them in reprimands, we read about them in the legal, not the legal update, well, we read about them in legal update, but we read them about it all the time. And the challenges with the professional standards committee and the contract writing, you know, it's only 5% of our contracts that get us in trouble. And if we're drafting clauses in such a way that we have them solid and we have, you know, terms written specifically as terms and subjects written specifically as subjects, so that it's very clear whose responsibility is what, we'll likely, you know, be able to avoid any types of challenging situations like that. Andy, you have a question?
Yeah, in regards to that financing clause, just kind of ties into what we were talking about. If for example, you know, we put a financing clause on there, it turns out we can get financing for the place. However, my client doesn't feel comfortable with the amount of monthly payment that he would have to make. Could he collapse the deal on financing?
So maybe it depends how you wrote that clause. You know, if it's simple, just subject to, you know, buyer obtaining financing on or before December 31st, it doesn't matter what the payment is. It doesn't matter what the interest rate is. It doesn't matter what the term is. All I have to do is arrange financing, period. You know, providing, you know, metrics as far as, you know, if you look at the standard BCFSA clause, and if you guys like, I'll bring that up. Hang on one second. Because it is I mean, it's very different than what we see. So give me 1 second here.
Mhm.
Now, I have another clause that I want to bring up as well.
What about Santa Claus? Are you bringing that one up?
But bing.
Let's see. Where is?
Well, what if it were to say like subject to the buyer obtaining and being satisfied with the financing? Would that
Yes.
give them a note?
That's a little bit better, yes. Yeah. But you know, the other element there is, you know, if there are, you know, if they're just not satisfied with what they're typically, like if they get, you know, approved for financing at, you know, market rates and you know what anybody else could typically expect to pay, why wouldn't they be satisfied with that? You know, so it still leaves an opportunity for a challenge. I can't I don't know why I can't see the. Okay, so I'm just gonna share my screen.
Like there's one financing subject that I have, subject to the buyer on or before date, arranging financing at rates and terms satisfactory to the buyer from a lender of the buyer's choice.
Yes, and so that's a clause that was drafted. It was taken from the clause library, but it was amended to not necessarily incorporate you know, some very specific information. Can you see my screen here?
Mm-hmm.
So this is straight out of BCFSA clause library. Subject to a new first mortgage being made available to the buyer on or before X date in the amount of, or you could say in the amount not to exceed. So, you know, you can always make some modifications to these, which provide for, you know, an interest rate not to exceed, an amortization period, you know, not to exceed a term, and blended monthly payments, including, you know, you can break it down, you know, between principal and interest, or you can narrow it down to just blended monthly payments. This would be very specific. Do you know what I mean? Like, so this would provide, you know, very little gray area and very little opportunity for a seller to challenge whether or not the buyer was able to obtain satisfactory financing.
I mean, what if this were to change between the time that you wrote this and the time that you were actually able to secure the financing for closing? I mean, I don't know. There's a lot of moving parts on this clause.
Well, so you should have financing secured by the time you remove this subject. You know, you're entering into your mortgage contract, you know, ideally before you remove this subject. You don't want to be removing a subject if you don't have the satisfaction or the subject satisfied.
Mhm.
It's very, very risky. And we, you know, the risk there, we saw a ton of that, you know, over this multi-offer stage when we were seeing deals collapse because they're coming in unconditional and then they didn't have the ability to finance it. You know, that's a very precarious place to be when it exposes the buyer, you know, to a specific amount of risk, but it also exposes you as a realtor to risk. If your client needs a financing clause, there better be a financing clause in that contract, because if it goes sideways, you're gonna end up in front of the regulator.
But how are you going to find out all this information at the time of writing the offer? Like, isn't it dependent on like for the price, for instance, right? Like you
Yeah.
wouldn't put the price in that term until you have negotiated and settled on it with the accepted offer, right? And that's when you would put it in, right?
Oh, I mean, you could, so it, you know, it's an amount not to exceed, so, you know, you can put some numbers in there and you can adjust it too. Just because you draft it, you know, in your first presentation, if it has to be amended because there's a significant change in price or something like that, you can always amend it. You know, it sort of depends on the situation. And you know, sometimes, you know, when there's a conversation or stuff going back and forth, sometimes you need to amend clauses that come from the other side. Like, you know, from a seller's perspective, if you get that silly, you know, the seller will have the house professionally cleaned, you know, as a seller's agent, you know, I would suggest that, you know, we'd be taking a serious look at that, scratching it out or modifying it in such a way that it provides, you know, where, you know, the seller will, you know, hire XYZ cleaning company for a period of 4 hours to do a, you know, a move out clean on the house prior to possession. Make it a term of the contract. You know, that provides you, you know, that says that the seller is gonna hire XYZ cleaners for 4 hours to clean the house. Period. If they do that and they provide an invoice, then there's absolutely nothing. You know, if it's just the seller will have the house professionally cleaned, there's zero, you know, there's zero teeth to a clause written like that. So as much clarity, and keep in mind, you know, these terms and these contracts, like they're great base work. They're great for a starting point, but we do have to understand that sometimes we do have to make modifications to these, and we do have to have the ability to amend them or adjust them in such a way that, you know, is truly finding the benefit for our client. The other type of clause that I wanted to talk about was this one right here. Can everybody, you guys can see my screen, you can see the highlighted clause here? Okay, this is a lot of times now, you know, we'll see this, and now this talks about, you know, it's subject to the seller at the seller's expense, providing the buyer a copy of a site disclosure statement as provided or as defined in the Environmental Management Act for the property, and the buyer being satisfied on or before X date with that. This condition is for the sole benefit of the buyer. Now we've seen clauses like this where, you know, it's the FOI, the municipal file, the property file from the municipality, or, you know, a copy of the you know, sewage plan, a copy of the well report, that kind of stuff. The challenge that we see in clauses like this is that there's actually, and we should be able to see this and identify this, and then if we see this, you know, from a listing agent perspective, you know, we're probably going to want to modify this a little bit. There's two elements involved with this type of clause. One, the seller has an obligation to provide something. Two, the buyer has to be satisfied with it. All this is solely dependent on, you know, whether or not the buyer is happy with it. What happens if the seller doesn't provide it? Is it the seller's fault it's not provided? Is it the buyer's fault it's not provided? Whose responsibility is it? What we should see when we see something like this, where both parties have an obligation under a term, we should separate those obligations. So what we should see here is, we would want to break this out. So the first part of this is a term, a fundamental term that we incorporate into the contract. So it is a fundamental term of this contract that the seller, at the seller's expense, provide to the buyer a copy of the site disclosure statement, yada, 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 for the property, period. Or, within 3 days of acceptance, or within 7 days, or by a specific date. It's not subject to anything. It's just a standard term of the contract that says the seller will provide this by this date, period. It's no different than saying, seller agrees we're going to close on this date, period. It's the same thing. It's just an obligation that the seller will. The second element would be subject to the buyer being satisfied on or before with said report. So there's what we've got in this particular clause is we've got a fundamental term tied together with a condition specifically for the benefit of the buyer, where we should be able to identify this, and as I said, separate them so that we have two independent actionable elements that aren't blended together. Does that make sense?
Yes.
We'll see that kind of stuff, and I mean you see it all the time, and it can be, as I said, any number of things, whether it's a municipal file or a sewage report or whatever the case may be. If we see that, we have to make sure that we spread it out, because, for example, the way this was written, what if the seller doesn't provide it? It's ultimately up to the buyer to remove this condition. It is for their sole benefit, and that sole benefit too, that indicates really who has the ability to waive or remove that condition. If we've seen it a couple of times too, where a clause has been written in by one of the agents, both for the benefit of the seller and the buyer. In that case, it's really, if I was a buyer's agent, I'm not going to be putting anything into the contract that's going to give the seller an opportunity to back out of it. So I'm typically not going to be putting a subject, for the benefit of the seller in a contract if I'm preparing an offer for a buyer, because I don't want the seller to be able to back out of the contract, and your buyer doesn't want the seller to be able to back out of the contract. It's a tough situation to explain to your buyer. If you have this contract, you think it's been satisfied, you send it to the seller, they refuse to sign it, and now you have to explain to your buyer why they're not removing that condition, and how come they have the ability to remove that condition when we're the ones that drafted that clause.
That would be against your fiduciary duty, would it not? You're not acting in the best interest of your client when you're putting something like that in.
Well, yeah, I mean, it's arguable, in some cases, you think that it might be beneficial, or there is an element of protection, or, maybe we just did it the wrong way. The intention could have been correct, but the actual execution was not the best. Probate is a prime example of something like that. And probate can be handled in a couple of different ways. It can be structured as a term of the contract, or it can be structured as a condition. If my buyer is in love with the property and it's absolutely the dream and it's the one they want, they don't care how long it takes, I'm going to be drafting a fundamental term of the contract to address probate, potentially address occupancy, potentially address having to adjust a completion date or something like that. But I'm going to structure it in such a way that the seller can't get out of it. If they sign it, they are committed to selling me that property. If I'm a seller, you may want to look at that a little bit differently. And this is, it's all part of the negotiation and how you kind of communicate with the other party. But from a seller's perspective, having a subject to probate in there isn't necessarily a bad thing either. If you have a subject to probate or being granted, if probate doesn't get granted by X date, and that date is, what the lawyers suggested it would be, and, there was a little buffer added onto it, it's taken a little longer, you know, all of a sudden the market's changed. Maybe the property's worth a little more. You've had a ton of inquiries. You've got people wanting to know if this offer is going to collapse. Maybe it's not a bad thing for your seller to have, you know, a subject that collapses the deal if it hasn't been granted, because there could be an opportunity for them to gain a little bit more. Maybe a multiple offer situation now, maybe there's a, you know, a higher bid coming in, you know, maybe there's a better opportunity. It's not that great for the buyer, but it can be beneficial for the seller. Catch the different sort of perspective on that. So it's tough because, and it's really going to depend on, you know, a conversation with your client on how they want to proceed with this. Sometimes, you know, those types of terms and stuff, they're very, very clear and they're very specific and they're very actionable. But sometimes, you know, you need the cooperation of the other side. So sometimes you have to, you know, be able to, you know, smooth the waters a little bit, how you present it to the other side, your presentation of those types of clauses is really, really important. The key really in all of it is, you know, understand what the goal of it is, make sure that we have a metric, and just make sure we know who has the ability to, you know, to satisfy deal, or who the actionable item is the responsibility of. We shouldn't have a clause that has the responsibility of two opposing parties that is actionable by one individual. The oh shoot, I just lost it. I had a thought. Anybody not on camera paying attention have any comments about what we're chatting about?
No, but I can definitely relate to losing a thought.
Relate to which, Brittany?
Oh, just how you lost your thought there?
Oh. No, it was you know, it honestly, it's just trying to, you know, avoid it. And, you know, we see it too many times. You know, we hear from realtors sometimes, you know, when you try to amend a clause or change the wording or change the contract, you know, I've had, you know, contracts and realtors call me that say, you can't write a contract this way because it's not on this specific form. You know, in the end, we have standard forms, and they are excellent resources and templates to help us draft the contracts that we want to draft. It's not a document where we just fill in the blank spaces. You know, that's the practice where, you know, it's going to be okay 90-95% of the time, but you know, we're not losing sleep over 90-95% of the time. We're going to lose sleep over that 5% of the time, which is going to be much more significant. And you know, the regulator, you know, the responsibility of you guys as realtors on the ground and protecting your clients' interest and making sure that, you know, their interests are covered and protected the whole way. That's solely your responsibility. You know, it's in the end, it's up to you to make sure they get from point A to point B unharmed, and you know where they want to be. So, and if you've seen any of the council reports or the legal updates that come out periodically from BCFSA, you know, there's all sorts of stories out there about, you know, misrepresentation, about, you know, due care, you know, fiduciary responsibilities. Practicing, you know, with or without due care is it's a very broad capture that, you know, in the end, you know, if your questions are challenged on something, what they're going to do is say, well, what would a prudent realtor have done in this situation? And if you've done something other than that, they're probably gonna, you know, slap you. They could suspend you, they could fine you, depends on what the extent of it is, and obviously depending on, you know, what the damage and the repercussions are. So it's important that when we're drafting, you know, they are templates, and we have to have the ability to understand what everything that's being presented. And if we need to make changes or alterations, just because a buyer's agent put something as a term or a subject in a contract doesn't mean you can't alter what that says or provide for, you know, an alteration to the subject that provides for clarity and specific action. absolutely do that anytime, because you technically don't have a contract until, you know, everybody agrees to all terms. All you have is an opportunity or an offer to make a contract. That's all it is. There's sometimes there's confusion between what's a contract and what isn't, but until all terms and the fundamental elements of a contract are met, signed and agreed to by all parties, all you've got is an offer going back and forth. Questions, comments?
I just had one on that clause that Andy had about the financing subject to, approved. Can we add that into the standard? You know, we have our standard terms and conditions, right, that are on the addendum. Can we just add that in the bottom? There's a blank in the bottom there, right? Can we just add that in there?
Well, then you'd want to remove the clause number 1 on that standard form, because you'd have 2 subject clauses for financing.
Yeah, okay.
So you would scratch out the first one and then type it in. That honestly, that's the biggest problem with that form is you can't modify it or manipulate it. It has 4 basic clauses. Our office templates, you know, we've provided, you know, 4 standard clauses within the terms and conditions section on page 2. You know, people, I know up island they get used a fair bit. In Victoria, they usually just get highlighted and deleted, and people attach the addendum to. But you know, your ability to clarify or amend those terms and conditions that are prefabricated like that is very limited with that page. You know, like if you use that page, you're kind of stuck with what's on that page. You know, other than it is what it is, and it's probably, you know, one of those tools that's perfectly fine, you know, 90-95% of the time.
Are you talking about addendum 2, the 5?
Yeah.
The big 5, as we call them.
Yeah.
I like, you know, Darren, what you had taught us like probably over a year ago when you know, around the time I was about 6 months into my role as a realtor, about keeping the contract of purchase and sale clean. You know, if you're not going to be using all 5 of those terms, then don't use them. You know, just use the available area and insert the terms or the conditions that you will be using.
And that's exactly what a contract should be. You know, if it's not relevant to the contract that you're writing, it should not be in the contract. All that you know, that verbiage about, you know, the realtor's brokerage is, you know, is just a brokerage. You know, we're not, you know, home inspectors, we're not plumbers, we're not contractors. None of that shit matters, to be honest, pardon my language. But in the end, realtors put that in there because they think it's protecting them, but it is not in any way protecting them. It does nothing but muddy up a contract, add a whole bunch of verbiage that doesn't relate to the interest and the relationship between the buyer and the seller. It has no place in a contract. It's just a bunch of you know, it's a bunch of nonsense where the realtor is just trying to protect themselves, and that's the wrong place for it. That information should be, you know, in a listing contract. It should be in a buyer agency contract. It should be in communications between, you know, the realtor and the client. You know, if there's no buyer agency contract, or at least no agency acknowledgement, you know, at least it's in an email communication and documented somewhere when you're having that discussion about agency, the introduction of the relationship. I want to be your realtor. You know that I'm not, you know, a plumber. You know that I'm not, so on and so forth. Like, that's where that communication documentation goes. It doesn't go in the contract of purchase and sale. But you're going to continue to see it all the time, because there was a point, you know, I'm thinking 10-15 years ago. You know, it was when, you know, really like web forms and stuff like that was really kind of developing, and all these standard clause libraries were being built out, and you know, there was and all this stuff develops honestly over disputes, over court challenges, over lawsuits. You know, the tools and resources that we get inside web forms and BCFSA comes from challenges and legal matters that they've actually had to deal with. So that the stuff that they learn from those, they actually give us. You know, if we're using the Victoria form, we're really limiting the resources that we have available to us if we're not open to, you know, looking at using you know, another document or using the contract as is. Because you can have you can have a 6-page contract purchase and sale with everything built out on page 2. Clean, simple, nice and concise.
And that'll benefit you, especially if you're in a multiple offer situation. People like clean, concise
Absolutely.
contracts, right? And I've had, you know, ever since you gave me that advice, you know, I've used it in a bunch of different often situations. And I've had a lot of tenured agents saying, wow, you know, this is a really clean contract, and
Yeah.
because of that, it was chosen.
Yeah. All the nonsense, but like I said, you know, if it doesn't benefit your client, doesn't even go near the contract. There's no benefit to your client, you know, for you telling them that, you know, you're not an appraiser or a home inspector. They know that. Doesn't belong in the contract.
Send an email.
I'm gonna continue to reinforce that message, but Andy, that's a message I've been preaching for, you know, well over 10 years, so.
No, I mean, like, as their realtor, you
Oh, yeah, totally.
you send an email separate from the contract and say, just so you know,
Yeah.
you know, these are the risks. I'm not a lawyer. I'm not an accountant.
You've already had that conversation when you're
Yeah.
talking about agency, when you're talking about what your role is.
Absolutely.
You should have already had that conversation, right? The problem is when we see it in contracts, you know, whoever's writing that contract probably hasn't had a conversation about agency, probably, you know, hasn't provided them with a disclosure representation, probably hasn't, you know, completed the basic steps to establishing a good working relationship with a client.
Yeah. Yeah, I think in a lot of reasons behind that is because there's so many people out there that won't give you the time of day until they're ready to buy.
Yeah.
Which, you know, you're trying to educate them on the whole buying process and the agency, everything within, you know, the first hour of meeting them when you're looking at the first property that they want to put in an offer on.
Yeah.
It's really hard to get people to commit to meeting with you, even if it's just for a coffee, you know, and
Yeah.
you got to find some inventive ways to get belly to belly with people sometimes. And
obviously getting them into the office, you know, for the first initial meeting, you know, whether it's an hour before you go start looking at places or half an hour before you go start looking at places is the best way to do it. You know, in the end, if you have to have that conversation while you're walking through properties, it's a great way to do it. And that conversation doesn't have to be like, oh, I'm Andy, I'm your realtor, and these are my fiduciary responsibilities. You know, you work that in, you provide them with the door, you have a brief description, you know, and then you share stories, you know, that relate to, you know, what some of those fiduciary obligations are. It keeps the conversation light. It helps get your point across, and it's a little bit more engaging than just, you know, bullet point form of what this document says. Thanks, Brittany. Oh, it's 10 o'clock. I got a 10:30 that I gotta get ready for as well. So if there's anything else, everybody okay for today?
yep.
Fabulous. I'll see you guys a little bit later on. If I don't see you before Christmas, have a Merry Christmas, but I'm sure we'll cross paths at some point. So
Have a Merry Christmas.
thanks,
Happy
everybody.
holidays.
Merry Christmas.